Welcome. It's with great pleasure that I open this event organized by ICMA in collaboration with IFC's Green Bond Technical Assistance Program on the topic of sustainable bond markets in Latin America. Sustainable finance is one of ICMA's four key areas of focus, and sustainability is increasingly integral to everything we do. We are privileged at ICMA to be the stewards of global standards for green, social, sustainability, and sustainability-linked bonds, collectively referred to as sustainable bonds, that are referenced by more than 95% of international issuance in this segment. These standards have been developed with the input of a wide market initiative of more than 400 organizations and stakeholders under the auspices of the Executive Committee of the Green and Social Bond Principles, supported by ICMA and currently chaired by the IFC. Most recently, the sixth version of the Green Bond Principles was published last June. This is the first update to the GBP since 2018. With this 2021 edition, the Green Bond Principles integrates best practices that are recognized by a majority of issuers in the market, while also preparing for current and future regulatory developments, especially in the EU, but also internationally. The 2021 editions of the Social Bond Principles and Sustainability Bond Guidelines have been similarly revised. The Green Bond Principles 2021 edition features notably two key recommendations on the bond framework and external reviews designed to increase transparency alongside the four core components that are use of proceeds, process for project evaluation and selection, management of proceeds, and reporting. A recommendation of heightened transparency for issuer-level sustainability strategies and commitments. Encouragement to supply information on the degree of alignment of projects with official or market-based taxonomies. Promotion of transparency on issuer processes to identify and manage perceived and known social and/or environmental risks. And finally, links and references to the complementary guidance of the Climate Transition Finance Handbook, the Harmonized Framework for Impact Reporting, the guidelines for external reviews, as well as the overall guidance handbook. Coming to the international market, the issuance of sustainable bonds is in a renewed growth phase, with combined volumes this year reaching $630 billion as of end August, surpassing already last year's total of $589 billion. While the market is on its way to another record year, some even anticipate it could reach the landmark of $1 trillion by end 2021. In this context, it is good to see issuance from emerging markets nearly doubling from 8% in 2020 to over 14% year to date. You will hear about LATAM's contribution to this progression in much more detail from other speakers on this event. In today's agenda, we have two great panels, with the first focusing on an overview of the market and the second on opportunities for issuers and investors. There is also an introductory keynote from Vivek Pathak, IFC Director, Global Head of Climate Business, who I have the pleasure of introducing. I am sure that you will all enjoy and learn from this important event. So now, and without further delay, it's over to you, Vivek.
Well, thanks very much, Nicholas, and very good morning, very good afternoon to all of you. I'm delighted to be here and be talking to you all on this important topic. Green bonds clearly have been something very close to my heart. We pioneered a lot of this in Asia when I was there. So I think I just want to start out with an overview of the market and then try and articulate what is the opportunity and therefore what's the importance. So I think what is important is that to say what is the really state of the market today, and what this report will really describe is the shape, the size, and what is labeled as green, social, and sustainability, or what they call GSS. Because over the years, the definition has gone beyond just green. And today, I think you have social and sustainability linked bonds are important as well. And so that's what we're going to focus on. The market analysis is complemented by an overview of some of the key policy developments, which are critical to make it happen. And also therefore focusing on the opportunities for growth of this entire subsector in Latin America and the Caribbean. The report was prepared by CBI and it was supported by ourselves at the IFC and the IADB. So what are the key findings of this report? What is really interesting is that despite the impact of the pandemic, the sustainable debt market continued to soar throughout 2020 and 2021 across most of these themes. And that I say is interesting because when the pandemic started, people were concerned. Will be focusing more on healthcare? Will this get ignored? Will the entire sustainability sector get ignored? Well, fortunately, it didn't happen. And part of it, I think, was to do with the fact that people realized that if you don't take care of the environment, this is where you'll end up there. The good news is that the entire sustainable finance market is sort of almost more than doubled, touching almost $50 billion in 2021. And just by way of example, 2 years green bond issuance in the region doubled from about 14 billion in September 2019 and has crossed about 30 billion right now. What's happening is that with economies beginning to pick up and growth coming back, and I think the real focus on building back better, as we call it, or building back green or building back sustainable, you are seeing a lot more opportunities coming about. And just by way of example, the total size of the green bond market is going to be north of 30 billion, social bonds between 8 to 9 billion, and sustainability linked bonds, which is a relatively new sector, touching 10 billion, which gives us a total of almost 49 billion for the entire sector, which I think is a fairly substantial amount if you look at it. So obviously green bonds are the oldest and they continue to represent the largest share in the market, north of 62%, and they continue to grow. But what is really becoming more interesting, so green bonds is the traditional sort of everyone knows how they're done. But I think as we're looking at the entire space, there are new sectors that are emerging, which is absolutely critical. So social bonds, sustainability linked bonds are critical. And I think over time, I hope we see a lot more transition bonds. So greening what is already green, what's out there, especially clean energy, things like that, that's happening already. But if we are to achieve the 1.5 or 2 degrees target, I think we have to get far beyond that. And therefore, the importance of sustainability linked bonds and what we call transition bonds is going to be important. And as you can see, the breakup is here in front of you all, and I'm sure you'll get the slides, so I won't spend time on it. But the other sectors are beginning to pick up, which I think is a very, very positive sign. So let's look at the market overview. So the 3 major economies that dominated the space were Chile, Brazil, and Mexico. Chile was by far the largest at about 18 billion, followed by Brazil and then Mexico. And these 3 countries, which is typically the case, account for almost 80% or 77% of the market in this region. Now, that is, to me, one way is it depends if you look at it, the glass half full or the glass half empty. I would look at it as the glass half full, because you're really talking about a huge opportunity for the other countries to come in and increase their market share. So clearly these 3 countries are at the top. They've got their act together, but the question for us is how do we get and work with the governments, the private sector, and yourselves to make it happen in the other markets. Countries have also started, new countries have issued the foray. So Barbados, Bermuda, Ecuador, Panama issued the first green bonds in the last 2 to 3 years. And that's made the total number of countries that have issued GSS bonds almost touching 14 now. The other interesting fact is that non-financial corporates account for almost 40%, which is interesting because in some other regions, the financial sector, dominates. So in Latin America, it's the non-financial sector, almost 40%, sovereigns, 25%. And then the rest is pretty dispersed. As expected, energy is clearly the most funded because that's clear. And one of the reasons I think energy is easy to do, it's not easy to do, is done easily, is because the proceeds, the allocation is very clear. You know where the money is going, you know how to measure it, and it's happening. So that energy accounts for almost 44%, which is about 13 billion. But I think the good news is that we are seeing transport pick up, and almost 28% went towards transport. What we would really like to see is that things like water, land use, industry, buildings, huge opportunity. So I think if we are to again succeed in our path to decarbonization, we definitely need to get far beyond just energy and transport, because otherwise we will be just focused on what I would call a small part of the economy. But for us to decarbonize, we need to be getting into green buildings, land use, a whole lot of other spaces, manufacturing in particular, that's a big thing, real estate. And I think that really offers a huge opportunity where I think collectively we can go and work with our clients and make it happen. As expected, dollars continue to dominate, but the good news is that local currency is increasing, so that diversity is important. And I think it's important for a number of reasons, is that we need to work on developing domestic capital markets. They need to be part of the decarbonization story. I think that's going to be very important. And second is that the less you have in terms of cross-border or flows of capital, the lower the currency risk. So I think when I combine these two, I think we really need to focus on developing domestic currencies and domestic capital markets a lot more. So let me conclude by saying, I think the growth in the space in GSS in the Latin American Caribbean region has been a trailblazer across emerging markets. It's clearly in the forefront, and I do hope that thanks to the great work done by all of you all, you can take it even higher. The agenda is only increasing. I think there's absolutely no doubt, as multinationals are looking at the space, domestic companies are looking at the space, companies like Coca-Cola, FEMSA, Suzano, Fibra, a lot of big names are there. And I think the other piece of good news is, like I said earlier, that although green continues to lead in the issuances, we are seeing diversification, sustainability-linked bonds, SDG-linked bonds, transition bonds, and that is going to be critical if we are going to have a healthy growth in the market there. Like I said earlier, Brazil, Chile, Mexico remain the large markets, but I do hope when we have the same meeting 2 years from now, their market share would have gone down. The dollar amounts I hope go up, but the market share goes down, and we have new countries coming in, and that the other countries can replicate what's happened in Brazil, Chile, and Mexico. Again, the other thing that I wanted to mention was the debut of climate resilience bonds. Traditionally, we focus largely on mitigation, but I think adaptation and resilience are becoming more and more important as we're seeing the impact of climate risk and extreme weather events. So whereas green bonds can also benefit from climate resilience, they're largely focused on GHG mitigation. And I think therefore, especially in Central America, where we see the vulnerability to natural disasters like hurricanes, I think resilience bonds could be a new subsector that we can see develop. And last but not least, the rise in sustainable agriculture investment bonds, I think. Given that Latin America is quite highly dependent on agriculture, I think this could represent a significant category of growth. So I am hoping that with MDBs like ourselves, we can continue to support the space and other organizations, and we need money for technical assistance, capital for de-risking. So all in all, I want to end on a positive note. I think a lot has been achieved by all of you all collectively, but I do hope that working together, we can take Latin America even higher and diversify it and get into other sectors as well. So thank you so much for having me, and I look forward to a good webinar with you all. Thank you.
Thank you very much, Vivek, and a warm welcome from me as well, from the ICMA, and we're moving right into the first panel. So I'd like to introduce our moderator for this panel, which is Peter Cashin, Global Head of Climate Finance at IFC. And with that, over to you, Peter.
Great, thank you very much, Simone, and it's a real pleasure to be with you here today. Welcome to all the participants. I'm very excited today to discuss sustainable bonds in Latin America, the development, progress, and prospects in this important asset class. I'm joined by multiple industry experts. I'll ask our panelists to turn on their camera. First, we have Muriel Caton she's a senior advisor at Vigio. From BlackRock, we have Pablo Goldberg. He's a managing director and head of research and portfolio manager. From the Ministry of Finance in Chile, we have Patricio Sepulveda, head of the Public Debt Office. From IDB Invest, we have Carol Sans-Paris, head of debt capital markets and structured finance. And finally, from BBVA, Angel Tejada. He's the global head of green and sustainable finance. So we have a great panel for today's discussion. And what I would like to do first is maybe just make a few opening remarks about the broader climate crisis, but also opportunity that this presents. So as you know, of course, we are facing a climate crisis. We just need to see the daily events to see that unfolding. But as we know, this is going to create enormous opportunity. We really believe we're on the verge of the greatest economic revolution in our history as we transition to a net zero economy. We estimate at the IFC that the opportunity for financing in emerging markets over the next 10 years reaches $23 trillion, which is an enormous number. And if we look at how can that climate opportunity be financed, there are multiple sources. So I'm in the financial institutions group, and banks and FIs will perform an important role in this. But at best, they could finance half of this 23 trillion amount based on our analysis. So it's critically important that capital markets fill that gap and play a huge role in financing the climate transition. And that's why this topic, sustainable bonds, are so important, because it's going to provide the needed financing for this. From the perspective of a development finance institution, we collectively represent a very small share of the global capital markets. So for the development finance institutions such as IFC, IDB, it's really so critical that we mobilize financing from the private sector. So we estimate for every dollar of DFI financing, there's actually $900 in the global capital markets. So what is critical is for us to develop the taxonomies, work with ICMA, build the foundations for capital markets, and then mobilize that financing from this 900 times that is out there in the global capital markets. So that's a key role that I think we will be playing, and we really look forward to also hearing from the real market participants on how this can be done. So to kick us off, let me turn to Carol from IDB to comment on the role that she sees IDB and development finance institutions in general playing in the development of the sustainable bond market. Carol, over to you.
Thank you, Peter. And thank you for this introduction. I'm going to echo some of the things that you've said about the importance of debt capital market for Latin America, not only to finance and solve the social and environmental issue, but also the importance of debt capital markets in general. Because debt capital markets are the fuel for economic growth. Bonds are efficient mechanism which can bring together investor holding capital and businesses seeking debt. So DCM, debt capital markets in Latin America, are not being utilized to their fullest, with the exception of some markets that we already covered with Vivek, which are Brazil, Mexico, and Chile. So the objective of development banks such as IDB and IDB Invest is to develop local and international capital markets as efficient capital markets are essential for the long-term growth in capital formation. So as well, our main objective as a development bank is to solve social and environmental challenges. And as our IDB president, Mauricio Claver-Carone, outlined in the Vision 2025 during our annual meeting in March, we want to put forward a roadmap to achieve recovery and sustainable growth in the region. And for that, we're going to focus on main opportunities, which include, for instance, the support of small and medium-sized firms, gender inclusion, but also very important climate action. So we see the debt capital markets as an instrument to mobilize private capital to solve the social and environmental challenges and to help meet the targets set out by the 2016 Paris Agreement on climate change, but also the 2015 United Nations Sustainable Development Goals. And given our mandate and focus on social and green investment, it makes sense that IDB and IDB Invest play and have played a large role in the creation and expansion of the sustainable bond markets in Latin America. So since 2017, as an example, IDB Invest, so we focus on the private sector as opposed to IDB. So IDB Invest has structured and or purchased 20 thematic bonds in the region, which is a mix of green bonds, sustainable bonds, but also social bonds. And we also decided to further cement our leadership with the publication of our sustainable debt framework, which is following the ICMA principle. And this was published in 2021. So it's really important for the development bank also to set the best market practices with respect to sustainable bond issuance. So how do we want to develop the sustainable bond market in the region? So for that, we follow a holistic approach to promote the participation of issuers and also the participation and the confidence of investors in sustainable bonds. We should not forget that although the market is growing rapidly, it's still a small fraction of the overall debt capital markets globally. So I could still call it's a rather nascent market. So we need to set the best practices. Otherwise, there won't be participation, and we want to create an efficient market with more participants to join in. So our solutions are three. First, we provide financial products at IDB Invest, so we can participate as a sole investor or anchor investor in bond issuance by our clients. We can also provide a credit guarantee in order to raise the rating of the issuance and attract more investors in the transaction. We also offer non-financial solution, and it's the same as well as the IDB. For instance, they were working closely with Chile in developing the framework for the green issuance, the same at IDB Invest. We also provide advisory services, so we support commercial finance institutions, private corporations, and national development banks to prepare for an issuance of green or sustainability bonds. And the third layer in our work is advocacy, so really important. We work to develop the integrity and the transparency of the asset class, because any breach of environmental or social integrity could have really a big impact, negative impact on this market, and could derail the growth of the market. So we want the participant to stay. So for instance, IDB Invest, and like the IFC, when you presented the report about the state of the market of sustainable bonds in Latin America, we want to educate market participants. We want to foster awareness about the product, and also the strategic commitment to ESG goals in our publication guide or sustainability protocols. We also publish guides on the way to issue thematic bonds, but also another point that received a lot of attention in the press was with respect to our green bond transparency platform that IDB developed for Latin America. And it's really important because integrity and transparency of the asset are paramount for participation on investor. So I would welcome everybody to look at this green bond transparency platform. And the idea is that we start with Latin America, and hopefully we will see similar platforms being created all around the globe.
Great, thank you very much, Carol, for that intervention. Wanted to reflect back on a statistic that Vivek mentioned. So in 2020, there was 50 billion in sustainable bonds out of Latin America, and already at this point of the calendar year, we've reached that same level. So clearly, it will greatly exceed it this year. So I'd like to turn to Muriel to give her comments, views on what you see as the evolution in the sustainable bond market and where we're headed with it overall. Thank you.
Thanks, Peter. Sustainable finance markets have shown an impressive development over the past 12 months. And Latin America was part of this evolution too. And also we have seen an increase in social bond issuance after the green bond issuance, so social bond issuance linked also to the COVID-19 pandemic, and the need to raise financing for projects that address social risk. In Latin America, in fact, this has impacted all sectors, all type of issuer, as already said previously, that is to say from corporate to large one to until SMEs. but also sovereign issue, because we have seen Chile was the first one, but we have seen on Mexico, Ecuador, and Colombia, for example, and also the public sector. As this concern all sector, it was on sector or with issuer that did not have a specific project to finance, but that they wanted to demonstrate their commitment towards ESG. In fact, we have seen the development of the sustainable linked finance, even if this is a young market, still in construction, I would say. But sustainable linked bond or sustainable linked loan, and also sustainable linked bond linked to ESG score. And what we have seen also in Latin America, because we rate about 160 corporate in Latin America. And what we have seen is about a 30% increase in the average ESG score between 2015 and 2020. That show, in fact, the commitment of Latin American corporate and company towards this issue. In the green bond or social bond, in fact, what we have seen in Latin America is a better rate in terms of post-issuance review, because there is a need, in fact, for the post-issuance review. Globally, it is still quite low, because about 15% of the SPO that is done on the market for only 15% around the world. So we have a post-issuance review, which is better, in fact, in Latin America. And this is also something very important to investors, because they want to know what is going on, and also this, of course, to help on the credibility of the issuer commitment towards ESG.
Great, thank you, Muriel. So let's turn the discussion now to the perspective of an issuer. So in the first half of the year, over a quarter of the bond issues in the sustainable finance, sustainable bond area were from sovereigns. So they clearly have played and will continue to play a significant role in the development of this market. So I'd love to hear from Patricio on the experience of Chile as an issuer, and how you decide currency, whether it would be social bond, green bond, and how you go about that process. Thank you.
Yeah, thank you, Peter. Good morning, good afternoon to everyone. So I will first to remember a little bit the story of the Chilean in this topic, and then I will, in my opinion, to give some key element in the Chilean experience in this market. So first we began this in May 2019. We published the first framework of the green bond framework, and then in June 2019 we issued the first bond in the Americas. So we still, and at that moment we have the first green bond in the America. Then in 2019 and 2020 we continued the issuance of the green bonds, and in 2020, at the end of 2020, we expand the framework, and we include the social bonds and also the sustainable bonds, because we consider that for Chile and for the state, the effort of the state is not limited to the climate area, but also we have to include the social policies. As a result, Chile has issued about 14.6 billion in social bonds, 7.6 billion in green bonds, and 1.5 in sustainable bonds. So all of this summing up about 24 billion in thematic bonds. So it represents, and currently it represents about 23% of our debt. This is one element. The second element that we include in the goal of the Debt Management Office, the development on this kind of issuance. So sure, we will continue to issue this in the future. I think that one important result of the transaction is that, of course, we expand our investor base. To give you an example, last week we issued about 2.1 billion in euro and also in US dollar, and the participation of the ESG investor was about 74% for the euro and 60% for the US tranche. So there is a very important expansion of the investor base. We also achieve very good level of demand and very competitive rates. We have some greenium, or in the case of social bond, also very competitive rate. In terms of the process, we comply with the ICMA standard for the green, but also for the social bonds. And we receive a second party opinion in our case from Vigeo Eiris. For the green bonds, also we include the certification of CBI. We consider that it's very important to have a high standard in order to continue to develop this kind of markets. Regarding the composition of the issuance that we did over time, I think that the first decision is regarding the currency composition of the government debts. So we have a goal to maintain approximately between 70% and 80% in local currency and the rest in foreign currency. So this is the first element. The second element is the preference of the ESG investor. So we issue, for example, in 2020, social bond in local currency, but thereafter in 2021, we prefer to issue in hard currency, in US and euro, in euro currency. But in the future, we would like to have more a mix between the local currency and foreign currency. We consider that is feasible, and also we would like to develop the local capital market in this kind of topics. Regarding the selections, how we did this in the government, we have two committees. The first is the committee for the green project, and the second one is for the social projects. So in 2019, we select project basically in clean transportation, but also green building and renewable energy also. But of course, this kind of project, we cannot create this project every year. So we select about 4.5 billion of green projects in 2019, and also in 2020, similar amount of 4.5 billion. But in 2021, we don't have more green projects. So this is one of the reasons that we also issue more social bonds. In terms of social bonds, you know that for government, the main portion of the expenditure is related to the social issues. So for Chile, for example, 70% of the expenditure is namely social expenditures. Of this, we consider that half of this share comply with the ICMA standard. So for Chile, every year we have enough portfolio to issue social bonds. We include, of course, the second criteria, or most important criteria, is the feasibility to deliver the reports. It is very important. We have to evaluate this ex ante, the report in terms of allocation, and the second one is regarding the impact. So this is also for us a very, very important element. Thank you, Peter.
Great, thank you, Patricio. Yes, there's a few numbers that really resonated with me. That the share of the funding that is sustainable, 23%. That's really significant. And the importance, as you said, of developing the local capital markets to support the local currency funding needs of government. I think that's also a critical piece of work. And you know, I really hope other sovereigns will follow the lead of Chile in terms of both the issuance volume and the percentage. It's really impressive. Now I'd like to turn the discussion to two other related topics. The first is on taxonomy and the important role that plays in being a foundational item to promote the development of the sustainable bond market. And then specifically I'll turn to Angel from BBVA, and if he can also comment on the recent transition bond handbook that's been developed. This is clearly one of the new emerging and really important types of sustainable bonds. Angel, over to you.
Thank you, Peter, and hi everyone. Well, certainly the possibility of establishing a common language for sustainable finance is very relevant, right, to facilitate investment. So, in the particular case of the Americas and the Caribbean regions, I tend to believe that it is going to be very important, right, to have local definitions, but always I tend to believe that supported by international standards, no, just to be able to not only to compare the different frameworks across jurisdictions, but also to compare investment opportunities. That I guess it's key, just to facilitate the capital flows in the region. Well, indeed, the IFC, you are it's very well aware, right, of this specific topic because you are involved in different initiatives such as the Sustainable Banking Network. So I guess that you are much more familiar than I am, but from our perspective, it is definitely very interesting that a country that is working on its internal framework, in its internal sustainable finance framework, either from a regulatory approach or from a more collaborative approach between the industry and the regulators, the development should be supported by international standards that in the end, we strongly believe that should serve as a starting point. Indeed, within that standardization and harmonization is going to be very relevant because, investors, global investors, I tend to believe that they understand several concepts around sustainable finance under the same criteria, and they might have the same definitions across the globe. So it is good to have I would say the benchmark and best practices included in the sustainable finance frameworks, the national sustainable finance frameworks. And if you move on to the particular case of the ESG bond market, we know that the market has been growing since 2014 and has been incorporating in different geographies globally, and always relying on internationally well-accepted standards, such as the ICMA, Green and Social Bond Principles mentioned by Chile, for instance, in their international exercises, but also the support from the IFC or the Climate Bond Initiative that was also commented by Chile. I think that it is key to follow these standards in order to capture the attention from investors, and to be honest, investors have been there investing in ESG bonds since the very beginning. So it is also good to see that the market is evolving, but keeping and following the standards that have worked so far very well. And having said this, and we are very optimistic about the effort that is taking place in the different jurisdictions, and we know that there are different that in each country they are incorporating these standards in their sustainable finance frameworks differently, but all of them, I think, that are doing a great effort to show the benchmarking and the particularities as well, the local particularities as well in those regions. And regarding transition, well, I'm just trying to be brief because the transition topic and transition bonds, I guess that we can be discussing this for hours, and it's definitely going to be an interesting topic for potentially for the Q&A. I think that the market in general is working on finding the good balance between what is already green today and maybe between those corporates that are working or activities that are working in their transformation of their businesses and industries. So in this sense, we all know that there are activities already that are very low carbon and others that maybe are not yet, let's say, perform in order to be aligned to the net zero trajectory, net zero economy. And so therefore, new improvements and technology advances are going to be needed. But that is why that I think that just to support this transition concept and this transition dialogue among investors and issuers, I believe that the document published last year by ICMA called Climate Transition Handbook is a very interesting document and report and guidelines for market participants. To be honest, these guidance are always around the concept of transition and should work as a guidance that might be used to support the green bonds, the sustainable bonds, the sustainability linked bonds. So not a specific alternative, but all of them in general, because in the end, and very briefly, I think that the idea and the goal of this climate transition handbook is to that can be used as a guidance that can be and should be applied to any type of ESG bonds. Okay, well, this handbook is already published, and you can find it on its website. It is true that, for instance, at BBVA, we recognize that there are several areas where the transition concept can come into play, and that is going to be very meaningful to finance these transition activities and these transition opportunities in the following years. Maybe without a formal label or principles at this stage, I tend to believe that initiatives such as this climate transition handbook of ICMA should help a lot issuers to better understand how to explain their corporate strategies for the transition instruments and how to link and to finance their transition activities through the ESG bond market. So all in all, again, maybe the conclusion here, and before leaving the floor to other colleagues to talk about this, I think that transition concept will request additional transparency and also maybe additional disclosures that are recommended, okay, internationally, and also, if I may as well, to follow other global transition advisors such as Science-Based Target Initiatives or the TPI, the Transition Pathway Initiative or Carbon Disclosure Project. So we'll see how it evolves, but also here we might be optimistic in the sense that transition is already there, and now there are guidelines available for issuers and investors that are willing to incorporate this into their investment frameworks.
Great, thank you very much, Angel. You raised the important point of reporting and disclosure. I think from the perspective of a portfolio manager, those are clearly important things. So we'll turn the discussion to Pablo, who's managing a fixed income portfolio. And Pablo, maybe if you could comment on the specifics associated with sustainable bonds, whether you see a greenium or not. We hear kind of sometimes conflicting messages as to whether that's the case. I guess it also depends on each market. And you know, transition bonds, I think, are also something that has caught your attention. Over to you, Pablo.
Yes, absolutely. Thank you. Thank you so much for inviting us to this very interesting forum. I think if I take a step back, I mean, it's very important to understand for everybody, what do we do at the buy side with all these bonds, and what do we do more generally in ESG? So basically, we are doing three types of things, right? We are creating products versus ESG benchmarks, and particularly in BlackRock, we have worked with JP Morgan to launch the sister funds, sort of the sister benchmarks to the most used benchmarks in the emerging market fixed income industry, which are the MB Global, the GBI. So we have helped them launch that and launch funds related to ESG. We are creating as well sustainable and impact funds. I mean, we particularly launched an impact fund a few months ago, which is receiving very good attraction to clients and inflows every day. And also we are incorporating ESG data into our existing investment processes, right? If we believe that being aware of sustainability enhances returns, why not doing it for portfolios in general, right? So with these three things in mind, we also at the time that we are creating all these ESG related funds, being through an impact fund or versus ESG benchmark, we are acquiring sort of a new fiduciary responsibility to our clients that is done to truly represent with our investment the desire of the clients. In that sense, for us, it's extremely important to say, is the use of proceeds in this green bond or sustainable bond, can we defend it? Can we defend it from a client and say, yes, this is exactly what's going on? I mean, you're giving us money to put to play with an objective, and we are being true to that fiduciary responsibility. So in that sense, one of the points that were raised was that of information and transparency. It is huge for us. I mean, we cannot overstate enough that concept. We are actually liable for that with clients, right? So that is extremely important. So we are doing, and I think anybody that is doing this work seriously, we're doing our own taxonomy, where we have our own teams going over the bonds, placing them at different level of green for our green bonds and different levels of what we call gold for our socially sustainable bonds. So we have our own taxonomy that we would add. So if eventually there will be sort of an industry standard taxonomy, that would be fantastic, because then everybody will be speaking the same language. I think that is extremely important, the work that is being done in terms of creating handbooks for issuers, so they know what we are looking for. That kind of reduces the sand on the wheels and the conversation. We're doing a significant amount of engagements with issuers in our role as being sort of one of the lead bond investors around the world. But then it is the issue of the greenium, right? I mean, I think here we have done some quantitative analysis, and there's two ways to look at it. I mean, it is clear that green bonds are coming to a premium with a tighter sort of spreads, etc., to the existing bonds for the same issuers. The question is this happening because the demand for sustainable assets is surpassing the supply, or the ability to issuers to bring bonds to market, and we're just talking about a technical factor that will happen in any market, or there's an actual expression by investors and saying, well, I don't care to forego a little bit of premium, either because I think this is the right thing to do to support these things, or because there's a positive externality that is not being captured. So I think that right now, maybe all of these effects are operating in the greenium. So we have a little bit of a technical factor, excess demand over supply. And at the same time, we have a clear reflection of the price that or something that we truly believe, that is bonds that care about sustainability, or bonds that bring a better sustainability, are lower risk, right? And this is a little bit of a question mark, how much each of these is contributing. It is to be defined. I think there's another very important problem, and particularly when we think about Latin America and emerging markets, that is that how can we avoid, when we are looking into sustainable bonds, how can we avoid to actually widen the gap between developed markets and emerging markets, right? I mean, if you look purely in ESG scores, richer countries have better scores. So we're thinking, okay, how are we just biasing capital towards the better countries rather than just bringing money to the countries that are potentially being even more important in the transition, for example, to net zero energy matrix. And there, at the end of the day, we need to rely on the science. So when we're talking about transition bonds is that, are these bonds truly leading towards better use of energy and more efficient use of energy? Or this is, let's say, a gas bond that is being brought with a social label to it just because it is improving whatever labor qualities for workers, right? And at the same time, we're just financing a big whatever gas or oil development on the background. So I think it's very important to understand and do your work where you are really sending the money to. So all these things is what we care when we're thinking, from this side. I mean, I hear a lot about the issuance. I think it's very important to understand what happens from the end user of these bonds.
Great, thank you, Pablo. Those great insights there. I really like when you were talking about the greenium differentiating between the technical side and the fundamental side. And I suppose both are at play. And yes, we also view companies that have a more sustainable approach as having lower risk. And in fact, that's been borne out in our own IFC portfolio. We've been doing ESG investing for basically 20 years, and we've seen that play out. As I probably should have mentioned earlier, but the chat box is open for questions to our panelists. And I think it'd be good if we jump to one of those now. Muriel, there's a question in there about SLB linked to an ESG score. And if you can expand on that point. And maybe if you also want to comment as well on the importance of verification and this risk of greenwashing and how that can be mitigated. Thank you.
So what I meant, it is the SLL linked to ESG score, not SLB, because on the SLB, in fact, when we give an opinion, an agency like us, in fact, it is to see the standard of the sustainable linked finance principle and SLB principle, and mainly the 5 pillars. But on the SLL, the sustainable linked loan, because this is, I would say, a private relationship between the borrower and his banks, and the ESG score can be utilized, and then you have the margin or the commitment fee going up or down according to the ESG score. This is the bank to decide. And what we do is that we commit to provide the ESG score, the ESG performance of the borrower, and to update it annually based on the ESG data the borrower can publish or provide to us.
Great, thank you for clarifying that, Muriel. I'm sure that's clear. So, I think the next session will address in more detail sustainability linked bonds. But I'd be interested as well, just if we can touch on that topic, since we've gone into some detail in transition. Maybe Carol, I'll go to you about if you want to comment on IDB Invest's perspective and view on SLBs and where that's heading.
Okay, so maybe before SLB, in terms of thematic issuance, as we commented earlier, we expect the all thematic issuance, sustainable finance in Latin America to continue to grow because they are tangible projects to finance as the initial effects of the COVID pandemic gradually fade, and the next wave of policy measures will focus on addressing and economic recovery, so more opportunities, obviously, for sustainable finance. On the investor side, we touch upon this as well. There is a growing demand and the technicality with respect to gremium, fundamentals or technicals. So there is a growing global demand for ESG investment with a low yield environment, which is obviously benefiting Latin America. So this excess investor demand for traditional high-grade thematic bonds naturally is overflowing into emerging markets and high yield. So this is a setup. Yes, there is demand, there is opportunity. After, it's a matter of what type of product will be the more prominent in the years to come. We discussed sustainability-linked bond. Yes, it's offering an opportunity for issuers who don't have necessarily the projects to finance, but they have a sustainability strategy in place and can devise certain KPIs overall around this sustainability strategy without this need for a specific project to finance. So the opportunity is tangible, but I just want to make a point is that from all the sustainability linked bond issuance that we've seen so far, I believe that all but one were in the local debt capital markets. We know that there is this demand from international capital markets, but it's also very important for development bank to think about developing the local capital markets. All the issuers are not made the same. So when assessing SLB currently, they have a certain maturity in incorporating long-term sustainability into their operation. They've got the internal protocols to measure and self-report their sustainability performance. But for instance, at IDB, we are going to work with other type of issuers who may require more time, historical performance in order to devise those KPIs. So it's really something that is dear to us. We are currently involved in a transaction with local issuers for the local capital markets. And again, just to finish up on the opportunity for thematic bond and including the sustainability linked bonds, there are many other products that we would like to see coming to the market. We are greatly involved with the blue bond, which is a subcategory of the green bond. And we are looking for issuers who will be willing to work with us, because typically the issuance size will be small, so obviously maybe a product as well and the format for the local capital markets. And again, we are really strict on ensuring best market practices, because we want to ensure that the market is here to stay, and transparency, integrity remains really at the core of our concerns. And hence, as I was mentioning earlier, the importance of reporting data, clear information, and supported by our Green Bond Transparency platform.
Great, thank you, Carol. Let's turn to a few of the questions that have come up in the chat. The first is related to ESG data disclosure and reporting. And maybe I'll turn to Pablo and Angel for that. Where are we in terms of the development with that reporting? How does TCFD play into that? And do you feel you have sufficient detail and level of reporting as of now, or is there really still room for improvement and growth? And then after that, I'll go to Patricio. There was a related question on disclosure and how to track and report on use of proceeds, this is all critical to the process. So maybe
Pablo, would you like to take it, please?
Yeah, sure. I can start. I mean, of course, there's been an explosion of providers of ESG data, right? We have like many companies now coming with a significant amount of looking at it from the point of view of the more traditional, almost a credit rating style of looking at stuff, kind of like looking at a bunch of indicators, a good amount of them from the World Bank, and then just packaging in some sort of standardization of normalization to others that are taking an approach of being relying on big data and looking into news reports and different sources of information across the world to just get momentum changes on some of these indicators. We, of course, are using everything. We believe both sort of on a level basis, but particularly on a progress basis. we have incorporated and include a lot of these indicators, ESG indicators, ESG data into our analytical systems. When we buy a bond, we can say, okay, this is how much a bond is adding in terms of, let's say, duration contribution to portfolio, but it's also how much the buying this bond and selling the bond will change the ESG score of our portfolio. So there's a lot of that. I think that what is somewhat missing is from the issuer side. I kind of like more disclosure of data from issuers, particularly in the corporate sector. I think sovereigns are more advanced than corporates, and some corporates are more advanced than others. But as well as we have said, some standardization of that issue. So this is something that we're trying to do more and more in terms of engagement than we do with issuers, saying, okay, this is what we need to be able and more comfortable to buy your risk. So we're working sort of on our side, but I think that collectively as an industry, we would like to see sort of more work being done in trying to generate sort of like global standards and enforceable standards for ESG data.
Angel, we just have a few minutes left, but maybe Angel, in 1 or 2 minutes, you could provide any comments to that.
Well, just a very quick one, because I think Pablo highlighted very well, the situation with ESG data. But maybe just to talk about again, the importance of having a framework on a local basis. So in the case of Europe, now we are obviously improving the way corporates, for instance, will have to report, and definitely that will affect as well how financial institutions might report in the following months. In the sense that ESG data, obviously now with the integration of ESG policies in the different processes in all the industries, are going to be very relevant, but also you will need, or we will need, everyone, the industry, sort of a standardization of the frameworks just to understand what data is going to be relevant for every single stakeholder. And this is something that it is changing already. I think it is going to affect the green bond market and the social bond market, or the ESG bond market as a whole. And also the providers, I encourage them to really work on how they are approaching issuers in this case, or other corporates and non-financial corporates and financial corporates, to try to gather that information, and also to, I would say, to canalize and to put information in places where we can gather that information from. So in general, to ease a little bit the process of gathering data that in the past was not that relevant, and now definitely it's gonna be key.
Great, thanks, Angel. And maybe for our final comment question, we'll go back to Patricio regarding the use of proceeds and reporting on that. And yeah, so if we can have a quick 1 minute review from you, Patricio, that would be great.
Very short response. So I think that in this case, the key element is the audit process. So we have to perform a very, very strong audit process. First, the registration of the budget line. Then we have to also have the information regarding each ministry. Of course, there is a different project. For example, for the metro building, it's more easy because there is this transference to metro. For the railroad, it's a transferential to EFE. But for the social experience, it's a little bit more complex. But the audit process is key. So they request inclusive the bill, the transference, bank transference, etc. So this is the way to track this, and this is of course included in the report that we publish.
Great, thank you, Patricio. So I think that pretty much brings to a conclusion our discussion. I won't try to summarize all the key aspects because we covered so much ground, but clearly we had a great panel of experts. And what I really appreciated is we saw all the different market components and participants, from the issuers to the investors, the DFI perspective, the verification agents. So I think this was really a superb discussion. So on that note, I'll turn it back to Simone to continue us on in the forum. Thank you.
Thank you very much, Peter. And Hello, everyone. So I'm Simone from the ICMA, the director within the Sustainable Finance team. And I agree with you, that was a great panel. And also it was great presentation by Vivek, setting the scene really for both our panels. So I'm happy to introduce the second panel to you now. So I'm just going to go in the order of the slides. Otherwise I would have gone ladies first. Very happy to have with me Carlos Arcila Barrera, who is an adjunct professor of the School of Management at the Center for Sustainable Finance in Colombia. Then we have Tom Eveson, who is the director for the Americas and Sustainable Finance Solutions at Sustainalytics. We also have an issuer, Gustavo Roca Garcia, who is a treasurer at Clubin. Then we move on to the investor. Happy to be joined by Sergei Strigo, who is co-head of emerging markets fixed income at, we just said BlackRock, another big investor at Amundi Asset Management. And last but certainly not least, we have the underwriter side, Anne van Riel, Sustainable Finance Capital Markets at BNP Paribas. So, and Leanne, if you could just, if everyone could just turn on their videos. Yeah, okay. Okay, I think I can see you all. That's great. So let us jump right in, because we've heard a lot on Latin American sustainable bond markets already. But perhaps we can also focus a bit more on areas that haven't been covered. And even if there is some overlap, I think it will still be good to hear a different perspective, perhaps. So let me maybe start with you, Carlos. Vivek has already set the scene, saying that the biggest sovereign issuers in LATAM are Chile, Brazil, and then followed by Mexico. But it would be very interesting, I'm sure, for the audience to also hear a bit more about other sovereigns in the area. What are we seeing? I think Colombia is planning something. Perhaps give us an overview on the market.
Absolutely, Simone. So first of all, thank you, ICMA and IFC GB-TAP for the invitation of this, and hello to all the audience. So Latin America, as you have seen, is a very particular market. And as you see, we still have a lot of way to grow. We are less than 3% of the total issue in the world. But I would like to separate sovereign to corporate in Latin America that I think is important. Let's talk a little bit about the sovereign. You have the Chile example, but we also have Mexico that issue a very interesting sustainable bond of 750 million. We have Ecuador, who issued the first social bond of more than $400 million called Casa para Todos. But more interesting is also what are we doing to get there? And that's where Colombia, I think, give us an example where Colombia as a sovereign country is going to issue the first sovereign green bonds. It's called TES in Colombia, and it's going to be 500,000 or 500 billion pesos. That is going to have very interesting things. The first is going to be 10 years. It's going to go 40% to water projects, 27% to clean transportation, and only 14% to energy. And that changed a little bit the idea of where the money and the use of proceeds is going. And another particular part is issued in pesos. And that's something relevant because Colombia has been one of the only countries that have issued most of the green social sustainable bonds in the local currency and the local markets. Also, I would like to mention a little bit about Peru. They are making some improvements and working in Colombia, in that case, working in some taxonomies. But in the corporate side of Latin America, we have a completely different story. The growth of SLBs, sustainable linked bonds, has been huge. And that's give us a question if it's because it's more flexible for the companies or is more for investor appetite. But I think that's very, very interesting to discuss in this panel. And finally, I would like to talk a little bit about, and I'm not sure if we talk about that, but about the rating and the credit rating, because after the COVID, a lot of Latin American countries got affected in the macroeconomic environment, but still we have 50, let's say 50% of sustainable debt, it will be investment grade and 50% high yield. And that's very, very unique and interesting, because if you compare with Europe or the United States, where everything is investment grade, that's quite different and set up also kind of a new market in the high yield. And lately, I would like to close with what are the opportunities and challenges in this region. Opportunities, as in the initial panel they mentioned, is agriculture, land use. Latin America export 20% is agriculture. Latin America emission 28% if agriculture. But also, I see a big opportunity in reporting. And I would like to mention, and just complementing a little bit the panel number one, initiative that we are taking in Latin America as the global transparency platform of IDB, where you can, and companies and banks can start to put in transparent way, not only the issuance, but also the location, but also what is the use of proceeds. And that gives me to the last point that I want to address here, that is the convergence with technology, because that platform also use blockchain, and they mention big data, they mention machine learning, and that will be super, super important for transparency, for reporting, for analyzing, and to grow and develop this market. So I will keep it like that, but thank you.
Thank you, Carlos. That's very helpful. And I think that really raised a lot of points, also things that we haven't really heard before, just because there's so much to talk about. But I want to pick up on one of your points on SLBs, which is still, sustainability linked bonds are still a relatively new debt instrument. And at ICMA, we've come out with the sustainability linked bond principles last year in June. And it was amazing how quick the uptake, especially in Latin America, was on that. And let me maybe address this next question to Gustavo then, who is here as a representative for one of those SLB issuers. Klabin has issued an SLB, but before that, you have already issued a couple of green bonds. Maybe you can share with us your thinking behind that, and why didn't you issue another green bond? What are your thoughts behind the SLB or on the SLB? Over to you.
Hello, everyone. Thank you for the invitation. It's a pleasure to share with you our experiences at Klabin. Klabin have issued the first green bond in 2017, and then we issued in 2019 the first 30 years green bond from Brazil. And we decided to issue the sustainability linked bond this year for many reasons. In my view, it's add more analyzed way of the long-term debt from Klabin. I understand that the links are more connected with our sustainable governance and sustainable force. It's important to mention that last year we have approved 23 goals connected to the Sustainable Development Goals from the UN. And we choose 3 of them and decided to put it in our sustainability linked bond. And this is better to understand and to be together with Klabin, understanding our goals, that if it's ambitious or not, connected with the Sustainable Development Goal from Klabin, from the UN. But on the other hand, we could not have issued another green bond because the use of proceeds were already committed to these 2 green bonds that we have issued. So it's a way to keep issuing, to be connected with the investors. So in our view, we only had the opportunity to issue the sustainability linked bond, and it's also another important way to be connected the investor with us in terms of analyzing the sustainable long-term relationship that we're going to have with them. And then I think that it was a very important issue from Klabin this year.
Thank you. Yes, that's very interesting. So on the one hand, you mentioned that you didn't really have any additional green projects to finance at the time, because obviously green bonds are use of proceeds bonds, so they're financing green projects, eligible green projects as per the green bond principles. And then within SLB, they're general corporate purpose bonds, as we call them. So the focus is much more on an issuer's strategy, which also helps you to interact a bit better with investors, perhaps. Let me maybe, before we turn to investors at some point as well, let me go to Anne next. Anne, is this something you discuss with potential issuers that are coming to you, this focus on the strategy versus what they have to finance? Is this an advantage? Can you maybe help us in that a bit more?
Yeah, happy to also provide our perspective here. So we always try to find the best format for the specific issuer, and it really depends on a number of factors. I think there's advantages for both types of formats, right? Use of proceeds versus sustainability linked, and it will really depend on not just the strategy of the company, but also the sector and how many identifiable assets somebody, an issuer can point to. So we typically start a conversation really by juxtaposing both of the options and walking issuers through, what are the benefits? What do you need to think about? If you're choosing use of proceeds, what are some of the rules or best market practices around look back, look forward? How do you go about internally looking at your expenditures and what could be eligible? And at the same time, if we're talking about an SLB, does an issuer have any quantifiable ESG metrics where there are sufficient history on reporting, where there's ambitious targets? Can we look at how that compares to peers in the same sector? So I would say that there's not really a one size fits all. It really depends on, where the company's in its ESG journey and also where the focus is. And, it's never a foregone conclusion which way to go.
Okay, excellent. Thank you. Let me maybe come to Tom from Sustainalytics. Obviously, when an issuer thinks about what kind of bond to issue, they, on the one hand, turn to their underwriters, to advisors, but they also speak to second-party opinion providers, such as Sustainalytics, who will ultimately then also give an evaluation or a review on the frameworks, for example. What are your views, and what are you seeing? What kind of questions are you seeing from the market? Perhaps also comparing that to, you evaluate a lot of bonds in developed markets as well. And also then when it comes to actually evaluating a framework such as for an SLB, which, as I mentioned before, is a relatively new instrument. Is that a bit more challenging? Is that perhaps more complicated than evaluating a framework for a use of proceeds bond?
Yes, I'll start with the first, the last part you mentioned there. Thank you very much. I think without a doubt, most people in the industry, whether it's the corporate issuers, the markets in general, the investors, or our roles in the third-party opinion providers, the complexity and diversity of the use of proceeds, and now the KPIs being applied to the sustainably linked bonds is continuing to grow. And yes, it is becoming, I wouldn't call it more difficult. It's also more exciting, but yes, you've got more and more industries and more use cases coming up in more and more regions. So regarding Latin America, so we've talked a lot about the statistics. We've seen approximately in total the bonds around 130 have been issued in Latin America, and Sustainalytics has provided opinions on just under half of those. So we've definitely been exposed to a lot of different bond issuances and a lot of different issuers. And then in the sustainably linked group, which I think is getting a lot of attention and is very exciting for sure going forward. In total around the world, we've crossed over into the hundreds, so we're about 120 of those globally. Most of those have happened, so 80 out of the we'll call it 120 have happened just in 2021. Prior to 2019, I think there was maybe one. The first two were in 2019, and then a few into 2020, and everything's happened this year. And then in Latin America, we've seen 17, although internally we know a few are in the works, and globally, obviously several more. It's by far one of the fastest growing groups. And considering that it now opens the market of sustainably themed bonds to a lot of industries that were maybe excluded or difficult to fit into the green bond use of proceed market, the expertise in what is considered a relevant KPI to a specific sector or a specific region is getting more and more complex and requiring a lot of expertise from the banking teams that are helping to advise and underwrite these, as well as from companies like ourselves and our colleagues at Vigio who need to increase this expertise and figure out what is material to a company in one sector versus steel versus a law firm. So it's very exciting because it does open up those opportunities. And you mentioned the differences between what we've seen in maybe more developed capital markets versus some of the more emerging groups. And in my, maybe this is more of a personal experience, the volume might be much higher. So for the very experienced, highly expertise teams of sustainability in the large Fortune 500 companies and in Europe, the volume might be very high in bond issuances in total. And some of those bonds have a lot of sophistication in the teams that they've put in. But I think that that's mirrored in LATAM. Maybe the volume isn't the same, but some of the, especially on the sustainably linked side that we've seen come to market, like Plabin was there, that was very exciting because it included not just waste reduction and emissions reduction, but they've included biodiversity. So that's where things get really exciting and where I think SLBs can really play a role in regional strengths because they can be customized to what's important to investors in the communities and the countries where they operate. So you've got things like the Brazilian exchange, B3, very exciting there that while there were some internal KPIs to improve gender equality and representation at a corporate level, it's also committing to a diversity index of all its constituents, which will spread to many of the companies appearing on the exchange. So I can go on, but I think not just SLBs in complexity, but now the hybrid or combination bonds, also very exciting because you're getting use of proceeds for social and green, and then layering in KPIs that are based on the sustainably linked methodology. So I'll pause there so everyone else can speak, but thank you very much.
Very interesting, of course, as well, because on the one hand, we talk about use of proceeds bonds, on the other about SLBs, but indeed, we've already seen Verbund, for example, issued a combination, right? So they had a framework which incorporated both. So very importantly on that, and also we had a question from the in the chat on that. Let me come to Sergey as an investor. So we've heard a lot about what's going on with regards to issuers, what's their thinking, you know, what do underwriters think and advise the issuers probably on, same for an SPO providers as Sustainalytics. But ultimately it also comes down to, is there investor interest, right? Would you buy these bonds? Do you have a preference perhaps for one over the other? And also there were certain risks mentioned. KPIs have to be ambitious for SLBs. There are a lot of things that investors look at and think about. If you can perhaps shed a bit more light on the thinking behind, behind your strategy and when you evaluate bonds for your funds, perhaps.
Sure. Thank you very much, Simone, and thank you for the invitation to participate in the panel. It was very good to see my good friend Pablo in the first panel. So it's great that you guys care about what asset managers think in this regard. I have a few remarks that perhaps I'll want to go through very quickly. I think the main role of the asset managers is really to one of the main roles is really to provide investors and asset owners with access to the investable opportunities in the market when it comes to green, social, sustainable bonds, etc. So because we can create these vehicles, we can create these funds that even retail investors or institutional investors can definitely access. And on that side, obviously, at Amundi, we've been pretty much one of the pioneers in the market. Currently, we're managing more than $2 billion dedicated to climate strategies in emerging markets only, right? So this is quite a high number. And on top of that, recognizing the very significant role of the multilateral development banks that they have in this market, we've partnered over the last number of years with institutions like the IFC, the EIB, and Asia Infrastructure Investment Banks in order to develop the market of green and sustainable and social finance within EM. And I think important role that we also play in is that we not just passively buying green or social sustainable SLB bonds when they come to the market, but we feel that our role is also to actively stimulate both the demand and the supply side of the equation. By the demand, we mean that it's our role to structure these funds, to create these investment vehicles and attract money from both institutional and retail clients. But also on the supply side, to actively approach both issuers and debt capital markets desks of investment banks, so-called underwriters in here. And for example, recognizing the issue that we've mentioned a number of times, and Gustavo mentioned on their side in terms of having finite source of green finance. That's why market needs to move into SLBs, for example. We think there is a lot of role that we can play, and we do into tapping smaller issuers or potentially smaller size. For example, private placement bond market. We've managed to raise close to $500 million in private placements in EM green bonds over the past couple of years, specifically addressing these questions that an issue might not have $1 billion to place in a green bond format because they haven't got enough green assets. So, but they might have a $50 million or $100 million type of size, which we also think very important to create this additionality and to be able to tap the smaller, perhaps smaller issuers, or just issuers with less green assets in place. Another thing what I would like to mention is obviously in terms of how we look at as an asset manager, how we look at the whole ESG perspective, with specific focus obviously on the green, sustainable, and social bonds. In our investment process, we have two things that we have to look at. We have to assess the ESG profile of the underlying issuer. This is first and foremost. And the second point is that to assess the instrument level of the greenness or level of KPIs in SLB format and things like that. And certainly in the first category, the ESG profile of the issue is extremely important because there are a number of opportunities where there was a green bond issued, but ultimately there was no the kind of the ESG profile of the firm did not fit with their kind of goal of issuing green bonds or sustainable bonds. Because at the same time, if you look at, for example, pollution, if you look at displacement of local population, we had a recent issue in Latin America, actually on the corporate side, it didn't really fit with their green bond pitch that they've given us. So we decided not to participate. So I think this controversies is very, very important to identify. And here clearly, things like reporting is also very important. So there is a certain lack of international accepted ESG reporting standards that I think it will be very important in the future to perhaps increase and enhance these type of reporting. Another point you mentioned, Simon, was on the whether we want to buy green, social, SLBs or sustainable bonds. To be honest, I mean, we are in favor of pretty much all of the ESG type of finance. The only thing we need to realize is that currently clients need to segregate quite often the investments that they make. So if it's a green bond fund, typically clients put it in a climate related strategy. You can't really sell them a social bond strategy in the same fund. So I think while the sustainable bonds is obviously very, very important, we think that they should be still, if possible, green, segregated sort of green issuance and perhaps social issuance and SLBs. Another factor as well, and we talked about in the first panel, and also Carlos mentioned on Colombia issuing local tests in Colombian peso in a green format. Investors, again, do sometimes need to segregate local currency and hard currency debt, because this is completely different risk profile. When you invest in a local currency bond fund, you have full currency risk pretty much. Where you invest in dollar bond fund, you basically have exposure to US Treasury and credit risk. So there's got to be a balance between local currency issuance and hard currency. We do acknowledge clearly for corporates, for example, it is very important to fund domestically because they eliminate the currency risk. So it improves the credit profile of the issuer in a sense. But equally, in order to maintain the visibility and in order to tap a wide investor base, especially on the international community side, dollar and euro denominated bonds certainly is very important. And just maybe one more thing for me on the SLB side, since we talked about that, I think it is very rapidly growing asset class. Clearly, it is perhaps easier for corporates to issue an SLB because they're not tied to a specific use of proceeds, of course. But there are certain questions raised within the market in terms of the KPIs, the level of KPIs. Are they too easy to achieve? This probably is the first point that we've come across. Another discussion is around the financial penalty. Is the 25 basis points or less coupon step up really a game changer for the issuer? Is that high enough penalty for them to change their behavior going forward? And of course, the usual question is auditing and measuring the mechanisms of the KPIs. So let me stop here.
Yes, thank you. Again, a lot of very interesting points. And I was surprised when you thanked me that we include asset managers. To me, that's one of the most important views, actually, because I think you can determine a lot about what is issued just by, creating the demand being there, right? And that's very important for us to hear from BlackRock before and now from Amundi. What's important to you? I'm sure issuers and other parties in the audience will find that as well, will agree on that. Let me also just comment on the KPIs. Indeed, the most popular bond characteristic, as we call it, linked to an SLB at the moment is the coupon step up. But again, it's still a very new market, so it's still developing. There have been a lot of other suggestions. But again, I hear a lot from investors on anything else that is suggested, sending money to a charity or having a premium and so on. There is always a caveat with that. So I think the coupon step up is what the market is preferring at the moment. But we will have to see what time will bring when it develops. Let me perhaps also say, you mentioned this reputational issue for some issuers that have tried to issue or that issued where you said, well, we're not interested in that because we think the ESG credentials didn't really match what they were saying, they're financing green. Would you say BBVA on the previous panel already mentioned about ICMA's Climate Transition Finance Handbook? And I just wanted to emphasize that again, that is guidance because at ICMA, we think transition is really a theme that can be used with both use of proceeds bonds, such as green bonds, but also SLBs, or even a combination of both. And what the handbook does, as Angel mentioned, there are a lot of disclosure suggestions and recommendations in there. Would you as an investor say this helps if issuers align their framework with that, i.e. disclose a bit more than they probably have to under just an SLB?
Now, from my point of view, absolutely. I think the more standardization within the reporting and guidelines that companies would find easy to implement and report against definitely will be very, very positive for the market, right? Ultimately, if we move into that direction, it will be easier for external data providers, for example, second-party opinions, etc., even for ourselves. We have a large team that of ESG research in-house, and they obviously look at all this information. But the more standardization, the kind of more frequent information updates, and perhaps more stringent checks on the data that we currently get from the issuers would be absolutely very welcome. I think this is clearly one of the key issues, not even from the point of view of actually selecting the right issuer or the right bond to buy based on the information provided, but we should not forget that we do not stop at the point of investment. Once we bought a green bond, it's not the end of it. Far from it, actually. We need to continuously follow both the ESG profile of the issuer throughout the life of this bond that we have in the portfolio. And we also need to maintain a close eye on the kind of fulfillment of the sort of whether it's use of proceeds or the of the KPIs for the SLB, right? We had instances where an issuer basically broke the spirit of the exercise by, let's say, investing in greenfield coal mines, for example, and a frequent issue of green bond. It's not in Latin America, thankfully, but nevertheless, we had instances, and in this case, clearly, asset managers need to think very hard whether they want to keep this type of investments or not.
Very interesting. Thank you, and I think that will be very helpful to the audience as well, because especially in Latin America, as Carlos also mentioned before, we have a lot of sectors that will need to transition. I see, Carlos, you have raised your hand. Did you want to comment on this? Or?
Yes, actually, I would like to complement what Sergi say, because when you issue a green, social, sustainable bond, an investor and the company is very clear that it's not only about the green bond. I think investor looks at the complete sustainability strategy and how this instrument links into that strategy, and that's very important for asset managers. But at the same time, going into Gustavo's points, there is a point that you have to have quotations, some flexibility, especially when you think about low capex industries that they are very intensive in investing in green assets, and also cross-sectional sectors that can have this flexibility and want to align the sustainability strategy into some issue and debt issuances. So going into that point, I think when you question about the transition bonds that can have that mix and that convergence between the use of proceeds and the benefits in reporting, transparency strategy, but also give like that flexibility to that have the SLBs. And I think that's quite of the reality of a lot of companies and industries in Latin America, but also for the investor can be more certain that things are going not only for the green bond and after that financing a coal mining, but going into also the whole strategy of the company. That's at the end is the main point.
Yes, indeed. It's a lot about transparency and credibility. So we've already talked about green and social, but green, I think most people always think of climate change. Of course, that's still the biggest threat to mankind. And of course, we have another COP coming up end of this year. But we shouldn't forget the other part that's also entailed in green. And I think we've especially seen through the pandemic now that this is also an important part, which is biodiversity. So let me come back to you, Gustavo, because somebody already mentioned before that in your SLB, one of the KPIs that you had was in fact related to biodiversity, which I think is very interesting. Could you perhaps talk a little bit more about that? What was that? I think it was the reintroduction of a certain species into the wild. what was that?
Yes.
And how do you measure that? And
one of the KPIs of our SLB was reintroduction of 2 wild species into our biomass. Klabin have done a big effort since ever in the region that we plant our forests, because we understand that also the native forest and also the biodiversity help us to continue in the region and maybe forever. So in the 70s, we have begun our effort with the ecological park to receive the animals and helps in bringing them back to the biomass. And then this is our goal, reintroduction of 2 wild species. And this is amazing to connect us with the investors, because this really demonstrate how care we do with the region that we are, and demonstrate that we are a long-term relationship with the community, with the nature and the environmental that we behave. And this is very good to demonstrate to the public that we are committed to the environment. And this was, in my view, very well received from the market. And then the people are asking, oh, okay, 2 species, and how are we going to do that? So it's a way to put the sustainability teams together and talk about it. So this is not more credit view, like debt profile, cash management, and all those things. It brings other part of the company that demonstrate the whole company much more than only treasury matters in the relationship with the investors and the company.
thank you. Sergey, do you investors like something like that? I mean, apart from the fact that it's obviously a good goal to have or good target to have to reintroduce species to the wild, but is that something easy for you to do due diligence on, to evaluate?
Sure. Look, it's somewhat more, I guess, more unusual type of instrument. I guess the whole sort of blue bonds market, etc. But I think there's definitely need for financing these type of activities. So we are very welcoming to more bonds to be issued in this kind of format. The KPIs linked to this type of this type of goals. Ultimately, you know, whether it's if it's a labeled green bond or labeled social bond, where use of proceeds go to these type of categories, it's absolutely fine. And if it's an unlabeled one, then obviously asset managers or investors need to do their own homework to see whether these bonds contribute positively either to transition or to some other sort of SDG goals that, you know, we set for our funds.
Thank you. And maybe let me come back to Anne. We just talked about biodiversity. We haven't talked so much about social yet, which is obviously also a very big topic for Latin America. And then also it's obviously the opposite side of the coin to the transition, in that we really need to have a just transition as well. What are you seeing there? What are the questions you get from issuers or potential issuers in that space? Because it's a lot harder to define because we don't have the science that we have on the green side.
Yeah, I think social is a very interesting aspect of the sustainable bond market, especially for the region. And I think you can actually do quite a lot with it. We see it in financial institutions with lending to MSMEs, but more and more corporates are also incorporating it in their sustainability strategy. So a couple of weeks ago, Telco in Chile mainly focused their use of proceeds bond around the social categories, which is you know, a slightly different tactic than most of the European telcos have taken with a focus on the green. So it is, you know, signaling that this is a very big topic for Latin America. The difficulty is indeed around how do you define what is positive impact on the social side. And there's a lot of discussion around, how do you define target populations? How do you link assets or expenditures to those target populations? So how can you isolate the impact? And as long as you can do that in a credible way with quantifiable target populations, right? Like segment of income or a segment of certain zip codes where you know that there's a majority of people living below a certain income threshold. As long as you can do that in a very credible way, I think it is a great instrument. And we've had a lot of discussions with SBO providers as well. There's a lot of focus on those two elements, right? The target population and what is the service or what's the additionality that you're bringing to align with the social bond principles.
Indeed, and the target population is actually something we don't have in the green bond principles. So for social, we also have eligible social projects, but then in addition, we have the target population. And something I guess is also very important when we talk about this is reporting. So reporting is one of the 4 core components of the principles. And that entails actually both allocation reporting and impact reporting. Impact reporting being something that's getting more and more attention because investors really want to see what's happening with their money. Are they doing any good with their money? It's also becoming more and more important, I guess, especially on the green side, but of course also on the social side. What's the real world impact that we're having? So not just theorizing about this, but also what's really happening, what's the effect we're having. And that brings me back to you, Tom. As second party opinion providers obviously don't just evaluate the initial framework, but you can also come in to evaluate the reporting side. What are you seeing on that front? Is that something that probably needs to be standardized a bit more, or is it easy to do for issuers? Also for you to evaluate, maybe?
Yeah, I would say that if there's one trend beyond just the growth of the sustainable themed financing market and its use cases and KPIs, is the increasing importance on the post-issuance. And I think we've heard that from Sergey and the previous panel and everyone, that the performance accounting and the impact are becoming more and more prevalent. And I think it is easy at the moment, but there are no standards. There are guidelines, and I would say best practices seems to keep most companies and most issuers in good form. But regarding the SLB market, as one thing that we should probably note here, as I pointed out some of the statistics, almost all of these have been issued this year. So we haven't really hit a 1-year time frame to see what some of those reporting metrics are going to look like and how detailed they are and how well benchmarked they are or relative they are. So I think that's going to be an increasing area of scrutiny from the overall sustainable theme market by the asset managers and by retail and the community, the ESG community as a whole. So it is difficult. But at the moment, it's I don't want to call it voluntary because there is an expectation on everyone, but we are moving, I think, towards more standardized process for that. And even internally, I'm sure all of the third-party verifiers are really allocating a lot more resources to that. So whereas once we called them annual reviews, now we're moving into impact reports and then into audited assurance. I think that's the way everyone's going to go, is that transparency and accountability are going to continue to become a bigger part of the whole sustainable themed market. So we do see it. Social, again, a little more, a little harder to define in some places. So that will become a bigger and more important place for issuers to focus on going forward. I would agree with all of that. And I think if you're going to go down this road towards sustainability themed financing, I think you need to be prepared for the need in a year or two to have very credible post-issuance reviews or updates. That would be my signal of what I see as a trend coming. And there's just one comment I wanted to add. It was meant to be the last part of what I said, where you might see a larger volume in the more developed capital markets, the larger ones like Europe and North America. But at the same time, at least speaking from a Sustainalytics level, the same ratio is true with the projects that we need to turn away because we feel we will not be able to provide a positive opinion. So I believe your question was, do we see a difference in dealing with the different markets? And I'd say the only difference is in volume. The companies coming to market, the teams that are advising them, and their ambitions and commitment to this seem paralleled in every region. Just the number of issuers and the issues that have come to market are fewer in Latin America, but the number of companies, small, large, that come to us and we question the validity of the use of proceeds or the KPIs or the ambitiousness, I would say is at an equal ratio, both sides, just the volume is smaller. So I thought I'd point that out. Thank you.
Very interesting. And usually when you question that, do they then go back to the drawing board and come back to you, or do they go back to their underwriters, maybe
most of the time? I mean, yeah, most of the time I'd say this process, certainly in the early stages, is collaborative. And I'd suggest that most of the ones we do that come through a sustainable finance or banking intermediary are usually far more prepared and get a lot more advice and come back with very acceptable solutions. It's more the direct and smaller players. And again, in the developed, or I want to say the larger markets, we have a lot more of those. And some of them we just say, I'm sorry, that just doesn't really fit our interpretation of a good market practice. And generally the ones that come alone don't come back as often as the ones working with a banking team, and those teams are getting very sophisticated and large as well, so they can offer a lot of advice. Yeah, thank you.
That's great, thank you. And perhaps that was already touched upon in the first panel, but maybe let me come back to Carlos. Maybe something that can help in that respect as well is if you have a taxonomy, and we increasingly see issuers also link their framework, to a taxonomy. Europe is obviously ahead of this. We have the EU taxonomy, but even that is not fully finished. But on the other hand, we see a proliferation of taxonomies globally. Is that helpful, or perhaps also for Tom, is it easy to evaluate that in a framework? Maybe Carlos first. What are you seeing with regards to taxonomies in the region?
Sure, yeah. So I think there should be a balance between being too granular and be too local, because you lose comparability, if I can say, between taxonomies and can be. But I think also you cannot be too global. Let's talk a little bit about green taxonomies. The ICMA or the EU taxonomy. It's kind of the base of Latin America, but Latin America, example in green buildings, is completely different story of European. Just because we generate electricity and heat from gas, coal, and water, and we have to adapt to a little bit of differences that we have locally. I think the development of a taxonomy in Colombia was a huge improvement, just to get that balance between what the global world is doing, but adapting to the special particularities of the country. And I think that approach at different countries, I know Mexico is working in something similar, Peru is working in some framework, help to the development, not only for the investor side, but also for the companies that can understand a little bit better where the money can go and where it cannot go. And as Tom mentioned, probably Latin American company need a little bit more understanding of what's going on in this market, because it's still quite, let's say, quite new compared to Europe or to the US. So definitely I see the taxonomy as a huge improvement, but at the same time it's necessary for the development of the market. But we cannot go into the trap that you should be specific and just be, oh, this is what we are and we are gonna, because you lose the comparison part and comparability that I think is very important.
Yeah. So I have to slightly correct you there. ICMA does not offer a taxonomy, but we do actually in the latest iteration, as the CBI has one, and but we do actually in the latest iteration of the green bond principles, we do also highlight that issuers should specify the alignment of their framework to any market-based taxonomies they have.
Framework.
Is that easy for Sustainalytics to use then? Is that easy to evaluate? Do you see that increasingly happening?
No, I wouldn't call it easy to use. I'd say yes, it's great to have guidelines, especially as more issuers that are newer to the whole sustainable finance group have a taxonomy that they can reference or get guidance from. But to Carlos's point, we are watching very carefully the rise of regional or even national taxonomies as a, I'm sure it's a great guideline, but it could also lead to a fragmentation and sustainability labeled only as it applies to the geopolitical interests of a particular country or region is probably not where we want to go. So we'll watch and balance. This is new to everybody, and what was a bond or acceptable as sustainable today didn't exist 2 years ago, and what will be here as sustainable and acceptable in market practice 2 years from now does not exist today. So I encourage everyone to be very innovative, not to push the boundaries of greenwashing, continue to be ambitious, but like Gustavo and Klaben and many others, I apologize I couldn't go through all the examples. These are fantastic use of proceeds, KPIs, but yeah, local taxonomies is something to watch for sure, because you don't want political interference there. You want sustainability to be the overarching theme. So watch and see, I guess. Thank you.
Yeah, thank you. And maybe Sergey, briefly, what do you think of having taxonomy indicators or KPIs in a framework?
No, look, I think I would agree with both Carlos and Tom on this, right? There's got to be a balance between, domestic regulatory environments and sort of more internationally accepted principles by investors. I think I do see significant role of regulation in the development of the sustainable finance in general, whether it's, through the channel of simplifying or helping the issuers to tap financial markets, whether local or international, but also from the regulation on the investor side, right? So, for example, we've seen in Europe, with the rollout of SFDR regulation, clearly a vast majority of asset managers that are involved in Europe have significantly increased their focus internally on the whole sustainability issue, right? And I think that's great. So now we have a range of different type of vehicles, whether it's Article 6, 8, or 9, that, if you have an Article 9, for example, you do need to have an impact fund rather than just a generic emerging market bond fund. So definitely, I think the regulation, both on the issuer side and on the investor side, does have a significant role to play. How much regulation there needs to be, very difficult to answer, right? At the end of the day, as Tom said, this is very early stages of regulatory environment, considering to, how many years, if not decades, we've spent on the regulating conventional bond markets, right? So I think, will probably take more years for the whole sort of frameworks to be settled and the taxonomies to potentially be unified. So, but it definitely, I think currently it's a step in the right direction.
Okay, thank you. Yes, indeed, regulation and policies are very important, and especially in the EU, we have a lot of regulation already, because arguably they are ahead in that space as well, but we see globally a lot happening, especially on climate-related disclosure. Also on taxonomies, it's very encouraging that we have the IPSF, the International Platform on Sustainable Finance, of which a couple of Latin American countries are already members as well. Currently it's 17 members, and at the moment there's a working group led by the EU and China that is working on a common ground taxonomy. So hopefully the market will not get too fragmented in that space. With that, we're actually point on time. We have to close this very interesting discussion, but I think you clarified a lot, but we also left a lot to still be discussed in the future, and we'll definitely have to follow the trends and the developments in this market. It's a very exciting market. And with that, I would really like to thank everyone on this panel, and also again thank everyone on the previous panel. Also thank the IFC for moderating it and for the keynote. Last but not least, I would also like to mention that a lot of the documents or a lot of the topics we mentioned, we have documents for. So if you go to the ICMA website, to the Resources Center, you will find all the principles, of course. But there is also additional guidance, such as the harmonized framework on impact reporting and others, which should be really helpful to market participants. And with that, I'll bring this to a close. And again, thank you very much for your interest and your attendance.